Hey, what's up my friends? It's great to have you back once again. So in this video post, I am only going to focus on support and resistance. Why? Because I find that a lot of traders misunderstand the term support and resistance, right? They don't really understand how it works in the market, and I see them, using it in the wrong way. Or in other words, what they've been taught is basically wrong. So let's say, for example, you see support on your charts, and then you queue with a buy limit order at support because it's an area of value. Then you notice price, slowly retrace, comes close to your order, but just not close enough. And then it reverses and goes in your favor, right? Have you experienced that? Or how about you place a buy order at support, right? Price then comes to your area of support, it gets you in the trade, and then it flush you out, right? Because it traded lower, flushing you out of your trade, and then reverse and goes back in your favor. Have you experienced that as well? So in this video post, I'm going to share with you on how you should go about using support and resistance, and hopefully, you can use it more effectively and helps your trading along the way. So all this and more in this video post. I'll see you there. Okay, so let's talk about support and resistance. So the first thing I want to explain to you is what I call undershoot. It's a term that I came up with, so if it sounds weird to you, don't worry. I'm going to explain to you what undershoot is about. So basically, you see price rally, then it retraces, it rally, it retraces, it rally. So at this point, you notice, price tested once, tested twice, tested thrice. So it's at support over here. So the fourth time it's coming back, you're in anticipation that the support will hold. So what you do is you place a buy limit order over here. And the funny thing is, price is what I call undershoot, right? It does not trade near to the level you want to get long, and then it trades higher once again. So thereby, causing you to miss the trade because it undershoots the support. Now, the another example is what I call the overshoot. So again, similarly, price rally higher, retraces, rally higher, retraces, rally higher, retraces. And then you notice, right, there is a support over here. So what happens is that, again, you place your buy limit order over here, hoping to get filled, hoping to buy an area of value. And this is what price does. It overshoots your support, and then it trades higher. So in this scenario, you got long, and you got stopped out at the same time. Are you with me? So what is my message to you? My message is actually very simple. My message is this. Support and resistance is an area on the chart. An area, this is the keyword. It's not a line on the chart. It's an area. So when you look at support and resistance, treat it as a zone where price could potentially bounce before it reaches the exact level you are highlighting out, or it could exceed the level that you are looking at and then reverse from there. So to make things simple, what I want you to look at is treat it as an area where price could come close to support but not very deep into the support area that you've highlighted, or it could exceed the area you've highlighted and then reverse from there. So here are a few examples to show you. I would draw it as an area on the chart. I use two lines to illustrate an area rather than one line. So it sort of preempt me that if price were to retrace, at this point in time, I should be alert to myself that, there is a possibility of price really retracing higher. So you want to be alert, right? You want to give yourself some buffer for this. So another example, support is an area on the chart. Notice, I've used this as an area. An area. You don't want to just put one line on your chart, right? For example, this resistance, you don't want to put just one line over here. Because if you are just focusing on this one line, chances are you will experience the two problems I shared with you earlier. Either price undershoot or it overshoot. Okay? So now let's move on. Now let's talk about the number of retests. Because I'm sure you've heard, books or, or maybe people telling you that, the number of times support and resistance get tested, the stronger it becomes. But let's think about this. Does this make sense? So first, let's understand why support and resistance they hold. Well, they hold simply because there is possibly an order in the market. For example, at the area of support, that is willing to bid up prices, right? Every time price comes towards the area of support, they want to buy at that area because they think it's an area of value. But what happens when that order runs out? What happens? So let me walk you through a hypothetical example. Say this is a area of support, and say I'm a very big fund. I want to buy $100 million worth of stocks or currencies or whatever. Doesn't matter, right? 100 million worth of stocks, currencies, bonds, whatever. So let's say each time price comes lower, I manage to get 30 million over here, and then I cannot get filled anymore before price retraces higher. Then it come back down, I buy another 30 million. Then it trades higher, come back down, I buy another 30 million. And it trades higher and it comes back down, I buy the remaining 10 million. And I basically, have filled up my entire order of the 100 million orders of stock, shares, or whatever that I want to fill. So now, there is no one supporting the market anymore. Say, for example, this entire order is filled, right? There is no more orders willing to buy at this area of support. So what will happen to this area of support if there is no more buying pressure down here? Well, you can see clearly this support has tested once, tested twice, tested thrice, and now it's the fourth time, right? If there is no more buying pressure, the logical sense would be that the support will break. Am I right? Because there's no more orders down here to fuel the buying pressure. So when you see a chart, right, support or resistance, it has been tested many times. You want to be careful of it because there is a good chance that it will break because of the buying or selling pressure has basically, been used up. The orders in the market has been filled. So be aware of this. Be aware of this. So the message that I want to put across is the more times it tests the support and resistance, the weaker it becomes. Right? This is my message for you. Right? This is a key takeaway. And now let's move on. Let's talk about your stop loss placement. Let's understand the stop loss placement. Because I think most traders, what they do is for example, this is a range market. Price trades higher, trades lower, it trades higher, trades lower, trades to the middle. And say, for example, you want to short this market. You notice this is a resistance. So price trades higher, and you go short, right? Where would you put your stop loss? Well, logically speaking, right, you will put your stop loss above the highs over here. Why is that? Because the textbooks tell you that, if you put your stop loss above the highs, and if price trades into the highs, taking out for a loss, it's telling you that, price is breaking out, and your trade is invalidated, and you should get off the trade. But recall earlier, right, the earlier example where I talked about overshoot. Support and resistance, they can overshoot on your charts, meaning they can just simply trade higher a little bit, and then come back lower. And if you were to place your stop loss just above the highs over here, wouldn't you be subjected to being stopped out unnecessarily? Does this make sense? Are you with me? And similarly, if you were to go long at support, say, for example, price then trades lower, and again, the textbook or the courses you attended, they tell you to put your stop loss below the lows of support because price has not reached beyond the lows of the support you've identified. And if price reached beyond the lows, it's telling you that the support is breaking and you should be out of the trade. But again, think about this. Earlier I shared with you, support and resistance, they can overshoot like this. So if you were to put your stop loss just below these lows, what's going to happen is that you will get stopped out unnecessarily and watch price goes back in your favor. So what is my point? My point is very simple. Don't place your stop loss just below support or above resistance. Because of the fact that I shared with you that support and resistance, they can do what I call the undershoot and overshoot. Meaning that they may not come close to the support area you've identified, or they may even exceed the support area you've identified and then trade back in your intended direction. Are you with me? Okay? So let me share with you a few examples of what I mean by it, of this overshoot example. So say for example, someone identified this as a support area. Then notice, right, price just trade lower and then it trades higher from here. Taking out those who place their stop loss below these lows over here and below these lows over here. Another example you can see. This is a chart of crude oil. You see that this is the lows over here. Price rallied higher, came back lower, triggering the lows, the stop loss all below here, and then it trade higher once more. So this phenomenon is common, right? You can look at your charts and see it for yourself, and use this information that I share with you, go and verify whether it makes sense to you. Because all this I'm sharing with you is based on my experience. I could be wrong, but still, I'm just sharing based on my experience. So it's best that you go and look at the charts and see whether, what I say, see whether what Rainer says, whether it makes sense, or is he just, talking nonsense. So let's do a recap. First thing I share with you is that support and resistance is an area on the chart. It's not a line on the chart, right? It's an area. Why is it an area? Because there is a possibility of price undershoot and or overshoot. So if you look at as an area on the chart, then you would be more alert the moment price comes near your area of support and resistance. And still with the expectation that, price will actually push you a little beyond your area you've identified. So that is something for you to bear in mind as well. And also I talk about, the more times support and resistance get tested, the weaker it becomes, because the order in the markets get filled. And once all the orders are filled, there is no more orders left to act as a barrier in the market. So what happens is that the barrier will break. So this is why your support and resistance tends to break after multiple tests. And last but not least, I shared with you, on why you should not place your stop loss just below the lows and highs in the market. So basically, don't place your stop loss just below the low of support or above the high of resistance. I'm not saying it's wrong, but based on my experience, it's not a very good place to place your stop loss. So yep, this is all I have in this week's video post. I hope you enjoy it. Right? If you have any comments, any queries, feel free to leave in the comment section below. And if you enjoyed this video, feel free to hit the subscribe button at the bottom right of this screen. So with that, I wish you good luck and good trading. I'll talk to you soon.